Welcome back to my channel. In this video, we're going to be talking about what's going on in the market. So we're back. Jeremy Grantham, a well-respected investor, one of the greats. His article's coming to you from the Daily Mail. He says, U.S. is approaching the end of a super bubble caused by COVID stimulus and could now endure the largest markdown of wealth in its history. Top investor Jeremy Grantham warns. Now, we're going to continue with the article. I'm just going to share my thoughts as I go. I don't claim to be as intelligent as this dude or anywhere near as knowledgeable. This is just a regular dude who's a hobbyist giving you his opinions on what I think is going to happen. Now, I have questions, as I always do. I have certain questions like this. Let's say we go up by 50 basis points, right? 0.5% increase. Okay. Let's say that the market really starts to tank, or pick a number. I don't know that 0.5 percentage point is going to do a whole lot to affect the market. But you're seeing a lot of corrections, especially in the clown market, as the Fed threatens to raise interest rates. So my point is this, though. Will the Fed stay the course if this bubble starts to pop? And will they re-engage with financial engineering? Now, my question then becomes, how long does that work? Because ultimately, it will work until it doesn't. And that's how these things work. And you have to accept the fact that you have people running these organizations that are not, as we like to think, the brightest minds. Because a lot of them are intelligent and they know what they're doing and they know what they're doing is wrong. And it's ultimately, all it's really doing is kicking the can down the road. So it becomes somebody else's problem. Ben Bernanke knew this when he started quantitative, the cockamamie idea that the Fed needed to be buying up bonds over the past 10 years to juice the market. Okay? Baby boomers, I know you're retiring. I'm sorry, but this is the risk you take. It's not the job of the Fed to keep the market going forever so you can sell off your stuff in retirement. That's not why the government exists. Anyways, let's keep going. I digress. Co-founder of the investment firm GMO warned on Thursday that the U.S. bubble is approaching the end of a super bubble that saw overall prosperity across the market despite the pandemic and rising inflation. You didn't see prosperity, okay? This is something that is hard for people to understand. You have not made any money on a stock until you sell it. Other than that, it's just unrealized gains. I mean, yeah, you made money in the form of dividends, but it's only on paper that you made money. So the whole prosperity thing is just the illusion of wealth. That's all it is, because they ultimately know that what happens when you look at your 401k and you see that it's up. Let's say you started the year with $100,000. By the end of the year, your 401k has grown to $150,000. Like Chris saying, you just keep putting money in, and like no matter what the market does, it appears that you somehow have money. Well, you didn't really what they're doing is tricking you into thinking you got richer. You didn't really, though. Okay? They engineered. I know this is hard to understand. It's counterintuitive. Look, I have more money in my 401k. I'm richer. Not until you sell it, you're not. Okay? So you just made that on paper, and tomorrow that could go down by 60, 70%. Okay? But so you go out and you spend money because you think you're wealthier. If your portfolio drops in half, it starts the year at $100,000 and ends the year at $50,000. You haven't really lost anything at that point, but you feel poorer and you don't spend money. This is the illusion of wealth that financial engineering generates. And it's something that I've been saying for a long time. A lot of people are celebrating the end of the bull market. I'm not going to celebrate the end of the bull market till I see the end of the bull market. The highly speculative part, at least. I don't care if, certain stocks remain irrational. Microsoft remaining irrational, I don't care. What I want to see is the idiot YouTubers that invest in BS clown stocks or clown stocks. I want to see them wiped out. That's why I hate this bull market. Legendary UK investor Jeremy Grantham published a paper claiming the market could lose a total $35 trillion in value should stocks, bonds, real estates, and other commodities return to historical norms in 2022, which he'll get to it. He said that while the market suffered at the start of the COVID pandemic, the Federal Reserve guidelines rallied them with low interest rates, making the markets unflinching to any outside forces, as he dubbed it, the vampire bull market. He's 100% right. Another massive influx was the stimmy checks. And people at home, and this is what drove AMC and GameStop, I don't think you're going to see, I'm speculating. I'm going to tell you that. The clearest path to wealth is to always be in the market. Dollar cost average into it. When it's irrationally high, you're buying. When it's irrationally low, you're also buying. But I think what's going to happen to a lot of these stocks is they're going to trade down, down, bounce up because people buy the dip, down, down, bounce up, and then the air is going to start to come out till it becomes I believe it was Hemingway, when asked how you go broke, said slowly at first, then suddenly. Said the market's, you stab it with COVID, you shoot it with the end of QE and the promise of higher interest rates, you poison it with unexpected inflation, and still the creature flies. 100% how I view this bull market. That is until, just as you're beginning to think the thing is completely immortal, it finally and perhaps a little anticlimactically kneels over and dies. I agree with this guy's sentiment 100%. We're going to look at the Shiller PE ratio. We're going to look at all of these. Grantham blamed the Federal Reserve and other financial authorities for creating the super bubble during the pandemic by lowering interest rates, influencing mortgage rates, and creating judiciously overstated view of our real wealth. 100%. We have actually gotten poorer over the last year. But this is normally how a bull market goes. You see how it dips, then you rebuy it, then it dips. Look at it. Everywhere. Spike up, down, back up, down. And here we are. So what I think it's going to do, if you're just looking at the S&P 500, is I think it's going to dip, bounce, then crash. That's what I think is going to happen. But again, I'm trying to predict the future, so don't come back to my channel if we're still in an irrational bull market at the end of the year. Dad, you couldn't even. Yeah, you were totally wrong about the bull market. Yeah, I'm going to be wrong a lot till I'm right. That's how that works. Because it's irrational, there's no logic behind it. He said that once rates return to normal and realism returns to an overzealous market, the bubble will pop. Then, as the bubble breaks, they crush most of the dreams and accelerate the negative economic forces on the way down. Now, not to pick apart every aspect of this article, but tell me if that doesn't sound familiar to you guys. Think about all of the teenagers, right, that are getting rich in crypto. It's hard. It's hard to stay out. You're like, that dude's got a new car that made it crypto, and I'm sitting here living below my means, maxing my tax advantage accounts. I don't even have money for hookers and meth. You know, like I'm sitting here, that dude's swimming in hookers over there, high priced hookers. I don't have any hookers spitting in my mouth over here. But it's hard. But how long do you think the hodl will last if something trades sideways or down for a year or two? To allow bubbles, let alone help them along, is simply bad economic policy. I agree. The Fed should have pricked this bubble a long time ago. They should have pricked it in 2019 and said, look, we're raising interest rates. If the market goes down, the market goes down. Grantham said the U.S. had already seen this trend before in years leading up to the Great Depression, 2000 tech bubble, and the 2008 housing crash. He added that Japan witnessed its own crash under similar conditions during the 1989 bubble pop. And I believe I would have to go check, but I don't believe that the bubble has recovered in Japan since. That's off the top of my head, so memory may not serve. You got the Tesla fanboys watching you. Hey, you said this, like a bunch of lawyers trying to pick you apart to prove you wrong. The Dow Jones saw a short rally at the start of January with shares reaching nearly $36,799 before dropping to $34,000. Once this corrects, expected to drop. I think that our market, I think the S&P 500, just to use that as a metric, if you just look at the Shiller PE ratio, it's got to drop 2.2, it's got to drop like almost 2.5%, not 2.5%. It's got to drop more than half. I'm sorry, long day at work, but it's got to drop more than half before it's even in a rational territory. But it is what it is. Maybe what happens instead of a crash, and this is a complete possibility, is that the market just trades sideways for years as earnings catch up. So there may not be a crash. This is the thing that people have to anticipate. No matter how knowledgeable somebody is, you may be waiting forever for a crash that never materializes. I'm sure the clown stocks will. The NASDAQ fell by more than 12%. This is a little bit too early for the doomsayers. Federal Reserve meeting next week, and investors are eyeing for any guidance on the central bank's plan to raise interest rates. Economists expect to steer markets to a 0.25 percentage point rate hike. So think about the fear with a 0.25 percentage rate hike, 25 basis points. Federal Reserve also expected to raise benchmark interest rates 4 times this year to tackle new annual inflation reading of 7%, the highest in 40 years. I'm going to share my thoughts on this. I don't know. Again, I can't predict the future. A lot of people are saying the inflation isn't transitory. I don't know that. I can't operate as if that's true. I can suspect that it's true. Inflation could indeed turn out to be transitory. So, I mean, what moves am I making? Oh, and I just plan on buying more stuff if there's a crash. I'm not doing anything different. But I'm just going to tell you this. If inflation burns at 7% and it continues to, and the Fed has to act, 0.25 percentage point is not going to tame inflation. You're going to have to raise rate. Peter Schiff says you're going to have to raise it to 8%. I don't necessarily buy that, but it's a possibility you could have to raise it to 4%. But can the Fed raise it to 4% with the crippling amount of debt that we have? There's all sorts of variables in this stuff. Higher interest rates could put a damper on rising prices, but will also increase the rate for mortgages, credit cards, and other consumer borrowing. Yeah, which will ultimately affect consumer spending, which will ultimately bleed over into companies like Walmart and Target and Amazon. So, there you go. Is this the end of the bubble? Like he said, describing it as a super bubble, super vampire bubble that just refuses to die, I don't know if this is the end. This creature may indeed have much longer to live. We don't know. Starting to show the death knell, but like any good Hollywood villain, he's usually not dead when you think he is. So, anyways, I hope you enjoyed this. I hope it helps you think about things. So like and subscribe, and I'm out.
I put in 12 offers and missed out on every single one. Ownership for me is big.
What's up, YouTube? Hey, I promise not to hold you long today, man. I want to get you on your way, let you get your weekend started, man. But I first had to jump on here just to love on the family. You guys already know how I'm coming, man. Coming with nothing but love for everybody that did everything in Lucid today. The emails, the text messages, everything came flooding in, man. Major salute to those of you that stayed 10 toes down, and whether you hit your $100 a day target or whether you hit it even bigger with how far it ended up coming down throughout periods of the day on today. And then major salute to those of you that did your thing with PayPal. Okay, again, guys, this is the importance of staying the course. I can't preach it enough, man, but I promise if you stick around long enough, it might not be easy, but it'll be well worth it, okay? The things you will learn, the skills you will learn, the small victories. Guys, I see people sending me tens of thousands of dollars they make on a daily, but it's the reason I show you guys the small victories. The people that's making $100 here, $200 here, because I want you guys to see what's possible. I already know the end game. I already know the end result, which is massive amounts of money once you guys learn these things. And more importantly, we're making money on the day the market crashed, and nobody made no money today except us because we knew what plays to take advantage of. I was telling you guys well in advance throughout the week what these plays that I would put. I can get out here. Let me know if that was helpful. Shoot me a text if you need to. It don't matter. I just want to know that I'm being positions out now. You either could be sitting on the sideline thinking about the ones you have high conviction in, but guys, this is truly what it's all about, man. You guys will go on and be able to change the trajectory of your family, your kids, lead a corporate plantation, the whole nine, okay? I'll take the bruises, but we'll deal with that one as well. Listen, we will do and we will have opportunities next week. I was making just off of, like I said, all the play. I think I made 10,000 today. You won't see it nowhere in sight, okay? With options I'm talking about. No, it wasn't 10,000. It was $6,556. I was making just off of, like I said, all the plays I'm telling you guys about. But that's in addition to everything I made yesterday, and on Wednesday, and on Tuesday, and on Monday. But look at this right here. What I wanted to share with you is this is now it's down to 17, okay? And so, again, these are the things that come with the territory of when you make a bad mistake, okay? Sometimes it'll sit you down, and now you gotta thug it out a little bit. I'm not tripping. I just want y'all to see the journey. It's easy for people to only show you victories, only show you the shiny side of everything, but I want you guys to see it. I want you guys to make sure that when the comeback happens, when this recovers, or just when I just take over the game, period, of this play, I want you guys to be able to see the whole process, okay? And so, again, with that being said, guys, while turnaround. I'm gonna start my revenge tour very, very soon and start kicking butt and taking names. Let's continue to do our thing, but more importantly, let's get ready to run it up again next week, okay? And I'm gonna give some guidance throughout.
Oh, Ah. See this.